So this is my first attempt at understanding what happens at the CBN. I'm going to be watching all the MPC briefings that I can find on the internet, starting today with the 99th meeting, MPC briefing that was that was done on January 20th, 2015, 11 years ago. Godwin Emefiele was CBN chair. So let's listen to this 18-minute clip.
Gentlemen and members of the press, I welcome you to Central Bank of Nigeria. The Monetary Policy Committee met on January 19th and 20th, 2015, against the backdrop of challenging external conditions and downside risks in the domestic economic environment. In attendance were all the 11 members of the committee. The committee reviewed key external developments, as well as domestic economic and financial conditions and outlook for 2015. The committee noted the tepid recovery of the global economy in 2014. The major impetus to global growth in 2014 came from the United States and supported later in the year by the drop in oil prices. However, both developments fell short of returning the global economy to the pre-crisis growth path. This was mainly due.
So one of the things I picked from that is that there are 11 members on the Monetary Policy Committee, and he just said that the MPC meeting, the 99th, happened January 19th and 20th, and now we're having the briefing on the 20th of January. He also says something about investment coming mostly from the US.
Weakness in Europe and a much slower pace of expansion in the emerging market economies in particular. Specifically, global growth continues to be constrained by a number of old and new adversities, including high debt and rising unemployment in many countries, geopolitical tensions and conflicts, the negative impact of commodity price shocks on commodity exporting countries, weak external demand, and tapering and eventual exit of the US Federal Reserve Bank from quantitative easing, triggering sharp corrections in the financial markets. Consequently, global output rose by about 3.3% in 2014, which was the same rate of growth attained in 2013. It is estimated to strengthen to about 3.5% in 2015. The committee, however, noted many downside risks to the outlook. The euro area and Japan appear trapped in low inflation and low growth conditions. High unemployment and debt could persist much longer in the euro area, in particular, while a possible deflation is likely if inflation continues on the downward trend. The committee also acknowledged the high likelihood of an increase in interest rates in the United States, which portends negative consequences for emerging and frontier economies, and already growth is moderating in most industrial countries and could further be dampened by the strengthening of the US dollar, more volatile capital flows, and financial system vulnerabilities arising from currency depreciations.
So basically, the first paragraph, the first 2 minutes of the speech is giving an overview of what markets look like in other climes, the US, Europe, essentially, primarily those two markets. What's happening, he talked about the exiting of the Federal Reserve Bank in America from their regime of quantitative easing at the time, and so markets are in the process of rebalancing back to normal. 2015, I don't know what happened before then that led to quantitative easing. I thought that was COVID at first, but COVID was 2020. But he basically gave a background, what's happening in established and emerging markets, and that's like a backgrounder to what is to come, I believe. So these are the things that the MPC has observed as part of their proceedings.
All of these could be combined increase the risks rising from the militarism, and of the Ebola epidemic in countries African. Further evidence in the United and the Euro area policy stance, inclusive growth and bad impact of falling oil prices, with acute revenue shortages in countries like Nigeria, Venezuela, and Russia, add to the risk factors.
So risk factors are revenue shortages in countries like Russia, Nigeria, Venezuela, as of that time. So these are risks identified by the MPC during that meeting.
Evidently, the outlook for growth in the various economic clusters continues to be shaped by the identified risks and opportunities. The IMF projects the major advanced economies to grow at a modest pace of about 2.3% in 2015, premised on a sustained growth in the United States and some improvements in Europe. The decision of the European Central Bank to continue with the existing provision of unlimited short-term liquidity, as well as the implementation of new programs, will be critical to the global economic performance in 2015. For the emerging markets and developing economies, growth could be modestly maintained in 2015 at about.
So, watching further, you see that the observation area is not just in Europe and America, it also extends to Asia, specifically Japan. And I can see examples, the central bank governor identifying that this is what the Japan area is attempting to do, accommodating, while the other side is doing the opposite, monetary expansion, something in that light. But I'm not sure I got that. But specifically, the first part of the speech is identifying what's happening in other areas, and like I said, I think it's zooming down to what's happening, what decision they will take to respond to those markets.
Similarly, monetary policy is likely to remain restrictive amongst developing and emerging economies in order to stabilize their local currency and rein in potential inflation pressures. The committee was generally of the view that monetary policy played a pivotal role in restoring economic activity to optimum levels globally, especially when complemented by structural reforms, fiscal adjustments, and better coordination of policy actions. In fact, current conditions call for engagement of multiple macroeconomic and structural policy levers. Domestic economic and financial development. The National Bureau of Statistics estimated real gross domestic product growth rate at 6.23% in the third quarter of 2014, compared with 6.54% in the second quarter. The committee noted the continued dominance of the non-oil sector, particularly services, which contributed 2.53% points, agriculture 1.25%, trade 1.08%. The committee noted with satisfaction the federal government's efforts to boost power generation and supply, among others, which would improve the economy's job creation prospects in the medium to long term.
So in 2014-2015, this is early 2015, the CBN's MPC is recognizing the efforts of the federal government to boost power supply 11 years ago, boost power supply, which will then extend into the rest of the economy, making it bolster, making it grow. As familiar language, is close to what we're hearing now, but I'd really like to get more and more into specifics. He has mentioned some statistics from the NBS that were observed at that time was agri, real estate, and other sectors are contributing to the GDP at the time.
Committee was however concerned about the weakening contribution of the oil sector to overall growth, which is now being exacerbated by the rapid drop in oil prices since June 2014.
So familiar problems. Oil prices were dropping around the time globally, and this reduced the contribution of the oil sector to the general economy. This was a concern pointed out here at the 99th meeting, and I am very skeptical with government generally, but I'm just so this language, this governmentese, this speaking, this terminologies, fiscal balancing, slow down pressures. We have been speaking English for donkey years, but let's keep going.
In addition, the committee noted that the security challenges in some parts of the country might also be contributing to the dampening effects on overall growth in the country. Headline inflation at the end of December 2014 was 8.0%, which was within the range of 6 to 9% benchmark for inflation set by the Central Bank of Nigeria.
Inflation was set by central bank to be between 6 to 9%, and at the time it was 8%, single digits. That sounds like, when Nigerians talk about the life before, was it Buhari? This was just before Buhari. The elections will be in February, and this is January 2015. So inflation at the time, 8%.
Recorded in December 2014 reflects a reduction in core inflation, seasonal factors related to the Unity celebrations, as well as the stabilization in food prices. The committee, however, recognized some upside risks to inflation in the near term, including the likely higher import prices on the strength of an appreciating dollar and possible food supply bottlenecks linked to insurgency and insecurity in some major agricultural zones of Nigeria.
So, in January 2015, the CBN was identifying risks to dollar, something related to dollar, um, um, at that time, and of course insurgency, which would likely cause some inflation, some uptick in prices of food. At the time, this was projecting into the year, and again, insurgency has been a problem for 11 plus 10 years. I've been dealing with this for so long, so we speak in the same language.
Rural money supply grew by 7.29% at the end of December 2014 over the level in 2013. This represented a marked improvement over 1.32% increase in 2013, but lower than the benchmark of 15.02% for 2014. The relatively slower growth of total monetary liabilities reflected developments in both credit and the net foreign assets (NFA). During the period, credit to government contracted by 21.8%, far below the growth benchmark of 28.4%. Similarly, the net foreign assets declined by 15.02%. Credit to private sector.
I'm going to pause the video because this language I really don't understand, but I'll summarize later.
Grew by about 12.1% was mainly due to the further tightening measures introduced at the November meeting of the Monetary Policy Committee. The committee observed that the bearish conditions in the capital market continued as equities market indicators trended downwards in the review period. The all-share index declined by 16.1% from 41,329.19 to 34,657.15 between December 31, 2013 and end of December of 2014. Similarly, market capitalization decreased by 0.2%, 18.23 naira to 11.48 trillion naira same period. Committee noted that the downward trend has continued into January 2015 as year to date both have declined by 16.2 and 15.7% respectively. Although this phenomenon is driven by global economic conditions, in Nigeria in particular, the situation.
So, the CBN governor, Godwin Emefiele at the time, identifies that some companies are actually divesting, foreign companies are divesting from the country. He cited the reason, too bad I didn't catch it, and then he says they have to work to mitigate exit of foreign companies.
Excellent sector development. The committee noted that significant pressure persisted in the foreign exchange market during 2014, resulting in further weakening of the naira across the three segments of the market. The exchange rate at the retail Dutch auction and spot opened at 157 naira 34 kobo to the dollar, inclusive of 1% commission, and closed at 164 naira and 8 kobo to the dollar, representing a depreciation of 12 naira 34 kobo or 4.28%. The interbank selling rate opened at 165 naira 70 kobo to the dollar and closed at 180 naira to the dollar, representing a depreciation of 14 naira 73 kobo or 8.63% in the period, while at the broad exchange segment, the selling rate opened at 170 naira to the dollar and closed at 191 naira 50 kobo to the dollar, representing a depreciation of 21 naira 50 kobo or 12.64%. Gross official external reserves as of December 31, 2014 stood at.
Before we get to external reserves, he just shared the exchange rates at the time, naira to the dollar. It was ranging between 160 to 180. 2014, 2015. This is early 2015. So dollar at the time was 180 at the maximum. Just to point out, he is about to speak to what's it called now? To
$34.25 billion compared with $42.85 billion at the corresponding period of 2013. The decrease in the reserves level was driven largely by the increased funding of the foreign exchange market interventions to stabilize the exchange rate.
There you go. Foreign exchange market interventions was the reason for the decrease in foreign reserves. I think I didn't catch that, 10% or 20%. There was a decrease in foreign reserves, so we were taking from our foreign reserve to subsidize forex circa 2014. Don't forget that by 2022, 2023, 2024, we're going to be messed up because of all of these interventions.
In the face of decline in reserve accretion, the country's external reserves, as at the end of December 2014, could finance 7.44, almost 8 months of imports, and which we consider very good given the average of 3 months. That is the standard. The consideration.
So the fact that we had reserves that could supply, that could help us fund imports for up to 8 months is impressive to the CBN governor, because the target at any time, I believe he is implying, it should be 3 months. I'm not sure if the idea of having a reserve or having foreign reserves for any country is to support imports of any kind, or just to be able to have something to hedge against when you want to borrow. I'm not an expert, but I just wonder if imports are an essential part of what funding foreign reserves are meant to do.
The committee noted with satisfaction the growth performance of the economy as well as the year-end inflation outcome. It was, however, concerned about a number of risks, including security challenge in parts of the country, which has continued to disrupt farming. Consequently, the committee decided.
I didn't play that part, but the part of this speech says the decision that was taken in November is not yet materializing. This is January, don't forget. November 2014, there was an MPC meeting, and the CBN governor says all the things you said will start to look a certain way. They have not exactly started in that trend, but we're telling you that we want to retain our decision on a certain metric, because we know that it's going to take time for that thing to materialize. I wanted to point that out, that's a familiar language. Government tells you to wait, we're watching this thing. We're in stabilization. Growth will soon come. We're just watching. We're on the right trajectory. Familiar language.
As follows. 1. All 11 members voted to retain the MPR at 13%, retain the CRR on private sector deposits at 20%, retain CRR on public sector deposits at...
By the way, I understand that CRR recently has gone to 50%. It was 20% in, January 2015. Cash reserve ratio, I don't know if that's a good, if it's, of course it should be better if what the CBN is holding on to in terms of private banking, deposits or private banking, what they have in their vaults, what the CBN lays claims to essentially is 20% as of 2015, and now it is 50%. I would like to talk to someone who knows more, in the future, to break this down, but that's just something to point out.
25% and retain the liquidity ratio at 30%. 2. One member, however, voted for an asymmetric.
So I think my first assignment is to understand what the CRR is, liquidity ratio, and the third one, MPR. Yes, monetary policy ratio. Is that what it is? MPR. Those three things I need to understand before the next video.
Around the MPR. I thank you all for listening. Good afternoon. Yes.
So then he goes on to take questions, and that would be a wrap on my end. I loved doing this. I want to do more. I don't have commentary except to say that it's my first, video of this format, trying to understand what the CBN does. Essentially MPC briefings. I will do more progressively from 99 upwards. Next one will be 100th. Join me then.